My good friends, hello. I am back as I promised that I would come back with more information for you. Welcome. And I'd like to thank For Jasper TV for making this possible so everyone from the Caribbean or anywhere in the world can get information where they can solve their own problems. Today we're going to talk about taxes. To be specific, income tax. You know, back in the days, we used to do things that they didn't care. They didn't care who you are. They didn't care what you do. As long as you don't get caught, you'll be okay. And sometimes you get caught, they make arrangement with you in order for you to pay whatever you take from them. Today, it is different. And our community is big around here in Florida and everywhere in the United States. When I say our community, the people from the island, the Caribbean community, we are here to stay. We know that. However, the world is changed. The United States is changed. Therefore, we have to make adjustment, the proper adjustment to survive. Now, we do have a problem in our community. We have to say it. The problem that we're facing is that in the tax business, there's a lot of people who's doing things the wrong way, and many times we end up paying for it. We wish they could make changes, necessary changes, so they can do things different way, which means they don't get the clients or in trouble. And I know a lot of people, they bring letters to my office from the IRS where IRS requested a lot of information from them and they are not able to provide the information that the IRS requested. Therefore, they're being punished. They're being fined. And when they do, you don't just pay what you took from them. They charge you what they call interest, penalties, and compound interest. It is very important to understand that. You're paying interest on the interest, and that they charge you that daily. When it's accumulated, sometimes you end up paying a lot of money. And the reason for the fees or the penalties and stuff, it's because of the tax preparers. The preparers, they do things that most of the times you don't even know as a client what they did or what they put in your return. And sometimes the way they did it, it's so obvious, it's so clear that it's easy. It's very easy for the IRS or anybody to detect it. Sometimes people receive letters from the IRS. The first two lines that I read, and I can understand what's going on. Now, what can you do to prevent such disaster to your tax return? It is very important for you to know what to do. Now, the first thing you do when you go to a tax preparer, I know you have to provide your information, such as your Social Security, your driver's license, including documents or Social Security for your kids or for your spouse. When you do that, you have to go someplace that is reliable, a person you can trust. It is very difficult to know or to detect, but sometimes you can get information from friends, from neighbors. They'll be able to help you. And then when you establish a relationship with that person, you can also tell the person, hey, I'm here to file my return. I do not want to add anything to it unless I know what you're putting in it. It's very important to tell the preparer that. The other thing that is very important You have to tell them, hey, I don't need any extra money. I know some people, when it comes to money, when you say extra, they don't care. Just give them the money. But if you're an immigrant, if you are a permanent resident, or even a naturalized citizen, you have to be careful. Because by doing that, if you take the government money, because when you're dealing with IRS, you're dealing with the government. It's one part of the government that's taking care of taxes. However, it is the government money because they finance it. When there's a problem, they have to come up and take care of it. When every single year, when there's shortage of money, they have to put the money in the system in order for them to function normally. Therefore, it is very important for you to know that you're dealing with the government. And when you're dealing with the government, it's no joke. Now, the reason I say that is because most prepared these days, I mean, in the Caribbean community, in the Hispanic community also, they do a lot of things that they're not supposed to do in people taxes. For instance, you go file your return. We all know some people at the end of the year, I mean the beginning of next year, I mean if you in 2024, as an example, we know you filing in February, March, or April 2025, but you're filing for the tax year 2024. Most people don't have a saving, cannot save any money because the amount of money they work for, they spend it all because there is no extra money to save. So they use income tax for their saving. Therefore, they anticipate a refund. They know they're going to get a refund. And they really need it. Sometimes they have other bills, additional bills that they didn't pay throughout the year. They have to use that money to cover whatever deficit they made or bills they didn't pay. They have to do that. Therefore, the income tax money is very important to them. But you have to be very careful. Why? Because you have to apply your due diligence just like the tax preparer is supposed to. Most of them don't, in order for you to avoid penalty, interest, or whatever it is from the IRS. For instance, if you go to a preparer, okay, you married with your husband or your wife and you have 2 kids. Many times the preparer advise you or tell you, hey, my friend, if you take 1 child, you give your husband 1, or if you take 1 child, you give your wife 1, you're gonna receive a lump sum for both of you. Each one of you can receive $6,000 based on your income. But if you file jointly, you're not gonna get earned income credit for the children. Therefore, you're not gonna get money really. You can get $2,500, $2,700, and most people would say, "Oh, only $2,700." And if we file separate, each one of us can get $5,000, $6,000, $6,000 and change. Oh, we're gonna file our return the way that we're gonna make the money. Sometimes the money you're getting, it is not a good thing, because you got to remember, Mr. Trump administration is not playing. And a lot of times when you get caught, you say, it's not me, it's the preparer. We know how bad the preparers are, because I'm a tax preparer myself. I never done such a thing. But I know how they function, I know how they operate. But if he mention it to you, saying that you're gonna make $6,000 and your husband gonna make $6,000, you must ask him, why when I do it, when we're filing jointly, we're not getting any money, and when we're filing separately, we're getting that much different. Now the thing is, the preparer never said to you, you filing head of household, your husband filing head of household. The preparer said you filing separate. But there is 4 categories that you should file, and you should know what they're all about. They're single, married, filing single. Single is a person who could be 15, 16, 17, 18 years old, working, getting income. The income is high enough to file by himself, and that single person can file by himself, and his parent could file with him as well, but on his return he has to check a box that stating that my parent filed with me. It's very important, because if he get credit and the parents get credit for him, because they usually give a little credit to single people who doesn't work for a lot of money, they're going to request some of the money back plus penalty. So single, that's how it is. And a person can be married, divorced, no kids, and can file single as well. Now, there's married filing jointly. Married filing jointly is when you file with your husband or your wife and with your kids as dependents. Very, very important. And there's married filing separate. Married filing separate is a good way to file too if you don't want to file together. I always tell people, I don't see why married filing separate, because you're paying me for your tax return, and you're paying me again, or the preparer, for your wife's return, which means you pay 2 times. The other thing is, it doesn't make any difference. In fact, you might end up get a little less money than when you're filing jointly. Okay? Now, some people does it because the husband worked for a bunch of money, or the wife, and they're gonna owe taxes, and some spouse doesn't want to get mixed up with all the money the wife or the husband gonna owe, so they choose to do it separately. For that reason, but if your husband money is your money, or your wife money is your money as well, you don't need to file separate. However, it's your choice. You can choose to do it that way. You can choose to do it the way you like. Now, one thing the preparer never told or never tell the people is that they're not going to tell you when you file separate with your wife that you're filing head of household. When you file head of household, it's like you're stating that my wife stays in an apartment or in a house she pays by herself, because you head of the household. And you file head of household. As a husband, I have my own bills. You cannot be together in the same house filing head of household. And most tax preparers, when they want to make two income from you and your husband, or your husband and you, they don't tell you that. They say you're filing separate. You in your mind thinking that you're filing married separately, but you're filing head of household. Single, married filing jointly, married filing separately, and head of household. Usually when you file your head of household, you're responsible for that apartment. You're the head of household. You're taking care of the apartment with what's in it. And he's taking care of the apartment with what's in it. Most of the times the preparer does that. Like I said, you pay him. Each one of you pay him more and pay him. And the other reason, you know they don't do their return right. Once you want to do something bad, they go all the way. Sometimes, let's say if you work for $35,000, $40,000, what he does, he take your return. Sometimes he put a Schedule C in there. He add a Schedule C in there. With the Schedule C, just show that you had a little business on the side and you had a deficit for $20,000. The worst thing about it is they don't do this Schedule C right, even though it's wrong already. But I've seen a lot of them. People come to me to get help. The way they did the Schedule C, they didn't put a gross, they didn't put a revenue, a total revenue from it, and then they didn't put any expenses. They didn't do the way business is supposed to be conducted is that you have your expenses, you have, if you're in sales, you have to have your sale, you have to minus whatever your gross is from your expenses, whatever there's all kind of expenses. There's car expenses, mileage, that. Some people choose gas, some people choose, fixing the car, whatever. Some people choose mileage. And you have the stuff that you bought, you have stuff that you sold, and you have all of that you have to work with. You have clothes that you use, laundry, rent, utilities. All of these things have to be deducted. However, some of the guys, they just put a business, put deficit, and that's it. So that'll make it easy for IRS to question that return, because the preparer didn't take the time to do it, at least, even though it's wrong because you don't have a business, but the preparer didn't do it the way you're supposed to file for a business. So it's very easy for IRS to see, and most of the time the preparer didn't even tell you that he added that to your return. So what happened is, sometimes they give you the money, it reduces your income, and you get all the credit you're supposed to get. Earned income credit, child tax credit, additional child tax credit. Sometimes they add school that you don't have. That school you have to, if the child is in daycare or child care, whatever they call it, you can get a little credit for it as well. It's not much. However, sometimes they put the parents, they go to college. And when they go to college, like the tax preparer add that, and the client doesn't even know and doesn't even go to school, because when you go to school, you get a credit of $2,500. So when you get $2,500 plus all the credit you're supposed to get, because he had a deficit in your return that reduces your income to $18,000, $19,000, $20,000, you get most of the credit. Then you end up getting $7,000, $8,000 you file with one child. A lot of times they do all that, it's just to get their money. What they do, they charge you an enormous amount you don't even know that they did. Sometimes they get $1,500 from your paycheck, $1,700. You still get a lot of money, because people like you, for that example that I'm giving, if you come to my office to do it, to file your return, after he took $1,700, $1,500 from your paycheck, from your refund, you still wouldn't get that kind of money he gets you, because he added a bunch of things to your return that I wouldn't dare play with your return like that. So he gets you a lot more money, maybe $2,000, $2,500, maybe $1,700, whatever it is, more than what I would tell you that you get. And most people, when they hear the money, $2,000, $2,500 more, you wouldn't consider me at all. You say, what is he doing? He doesn't know what he's doing. Or it seems like he's stealing my money. That's what most people would say. People said it to me before. But I tell the people all the times that that's the way I operate. I'm not going to add anything to your return that is not legit. Okay? That is not the way it's supposed to be. Or I'm not going to take away anything from you. I'm going to take my time, do it the right way, so you can get all the money that you deserve. Okay? It is extremely important to talk about that, because a lot of people don't even think about it. We're in November. What happened is the software company called me or emailed me a few times, reminded me that tax is around the corner. So if it's around the corner, it is nice for us to talk about it, because by talking about it, a lot of people will be able to avoid what coming to them, or they'll be able to identify what they did to them last year or the previous 2-3 years. Because sometimes you go over 2, 3, 4 years, they didn't say nothing to you. IRS doesn't say anything to you, because not only they can be watching you, or they haven't been able to see it, which is good for you. What I tell people, sometimes people come to me, they say, well, I follow with such and such, and that's what I was getting as far as the refunds. I tell the people, the way I see your return, if I were you, I would stop doing it right now before they see you, because it might be this year they're gonna see it, and if you stop, maybe they won't be able to see it, because you stopped before this year, the year in question. You filed correctly. When they say it's correct, and they forget about the past years. This is why I advise people, get out of the system of, when I say the system, get out of the way you were doing you were filing your return before they see it. Because if they see it, the money you rely on every year to take care of your bill, to take care of your stuff, to take care of your bills, to take care of your stuff, you're not gonna see it for a long time. Okay? You're not going to see it for a long time, because they're gonna ban you from getting credit for your children. This is why it is very, very important to talk about that, and to take what I'm saying to you now in consideration. Otherwise, you're gonna end up paying a high price for it. When I talk about taxes, a lot of people don't think about, there are many things you can do to get deduction on your taxes without doing what the tax preparer asks you to do, to make more money and to make them a lot more money. He's getting a lot more money. Can you imagine if you go file your taxes, the guy see he can get $1,700 from you. The next person he get 15, maybe the next person he get 12. If he get 15 or 25 return for the day, sometimes they get a lot more. I don't get that many, because I don't get people extra money. And I will never do that, because if I did that in the past, right now, that would really, really hurt my conscience. Because if a person get deported or get arrested as an immigrant, have their green card taken away from them, that would hurt me a whole lot. Therefore, I made the right choice. Maybe I could make a lot more money, but I wouldn't be happy with that money. Like I said to you, there's many things that people can do to reduce their taxes. For instance, there's state sales tax. You can get deduction from it. There is what they call reinvested dividend. Out-of-pocket charitable contributions. They all the same. Student loan interest paid by you or someone else. They are what they call moving expenses. Okay? They are child independent care credit. You know, child independent care credit, you put your child in the daycare, you get credit for it. They are what you call earned income tax credit. You see, and there is state tax you pay last spring. All these things are deductible. The problem is the tax preparer, they don't take time to go over these things. They go the fastest way that they can. The easiest route they can go to get the money because they're ready to take the next client. Now, if you're going to ask the people for the 10 most deductible, the 10 most overlooked tax deduction, or things that you can, you know, get deduction for, it's going to take some time, because you're going to have to tell the client, hey, can you go home, get me your school paper, get me your child daycare statement, get me this, get me that. And in order for the person to get deduction, a good tax preparer needs to see the information, because there's a tax ID number on the child daycare and your school too. There's the address, the name of the facility or of the business, and you have to have all that in order for you to get the deduction that you should be getting, instead of just put something that you know you can do fast and easy and get the people the money that they don't deserve, or that's going to get them in trouble. Now, do remember the 4 status you can file, and don't let people make you do otherwise, like make you do something that you shouldn't do. If you you live by yourself, you don't have no children, or you were married, you divorced, now you divorce, you can file single. If you don't have any children to file with, you file single. If you married with someone, you live in the same house with the person, you have children, the best way to file, marriage filing jointly. Married jointly. It's very, very good to do it that way. Now, you have other options. You can file married filing separately. However, like I said to you before, you get nothing out of it except you pay any preparer or me twice to file it for you. And it is the right way to file if you marry, you live with your husband. Now, if you live by yourself, you have a child. I know a lot of people live by themselves, and then they have 2 children or 3, 4. You have the right to file head of household, because even though you get payment from or child support, whatever, from your baby father, but if you rent your house or your apartment under your name, you live with your children, you have the right to file head of household and to get all the credit that you deserve based on your income. If you go to school, you can get credit for your school. If one of the children go to daycare, you have the right to get the credit for it. If the oldest one going to college, you have the right to file with the oldest one. If they don't file by themselves, if the oldest one file his own return, and then he filed with his school, and he's making a certain amount of money, you might not be able to file with him. You may not be able to file with him because he has his own things going. But if he stays with you, you're taking care of his stuff, and he doesn't work, he's under 24, you have the right to file with him and to claim all the credits from him, from yourself too, and from the little one. It's very important for you to know that. However, in some cases, the tax preparer, they let you know that you can file separate with your husband while your husband live in the house. And he gets you credit for you, all the credits for you, with one child, and he gets your husband or your wife all the credit for her or him with the other child. That's head of household. Both of you cannot live in the same house, claim head of household. Once IRS see that, they're gonna ask you not only to pay all the money back, because when you file jointly with the children, you get credit based on your income. Now you got to remember, when you combine the income, most of the times the income become higher and you get over $50,000 combined together. Most of the times you don't get most of the credit. For instance, the big credit, which is earned income tax credit, you won't get it because your money goes over the limit where you should get some of the credit or all of the earned income credit. So it's very important for you to know that when you go file your return with someone, not to let him do what he wants to do to you. Because if he say you can file separate, you get a lot of money. When you come back to him, he'll tell you, hey, I told you you could file separate, but he didn't tell you that was head of household. That's what you have to be careful with. You're not qualified to file as head of household because you live in the same house with your husband. Now, some people use different address. They say, okay, I want to make the money, I'm going to use a different address. Some people does that. Now, when you do that, you got to remember, in the other address you're using, there's other people who's filing taxes there too. I mean, it's a little bit better than filing at your house because you file marriage filing jointly prior to this year. However, there are other people who's filing head of household in the same house you file, or file married filing jointly. When you look at it, the only difference is you don't file at the same house with your husband. However, you can get in trouble because there's other people who file at the other place that you use. Very, very important. Unless, I mean, it's very rare. You have your mother or your father, they're getting old, they don't file a return anymore based on their income. They only get Social Security, which is not much. They don't pay taxes on it. A lot of time, they might not have to file a return. Then you use their address. It's better for you when you file with at the same house that you used to file with your husband or your wife jointly. It's very important for you to understand. But I'm going to tell you the main reason why I'm here today is to tell you, not only, even if you've been doing it for a while, you don't get caught. And the way it's going right now, they're investigating everything in this country, especially where they know immigrants get some money every year. They don't like it, and it's their money. I wanted to tell people, their earned income tax money or the other credits you get, they're not your money. They credit the government give because they feel that you don't make enough money. And some politicians they want to do something to say, hey, I did this. Or for some people to like him or her, whoever it is, they giving the credits to you because, like I said, you don't make enough money. They think you need help at the end of the year. They think the money gonna support you and your family. They did it. The money they give, for instance, earned income credit, a politician came, he did it. Another politician came, he said, well, let me give them a little more money. I'm going to give them child tax credit. Another one comes and he said, well, I'm going to add something. I'm going to give additional child tax credit. Another one said, I'm going to give him money for college. Another one came and said, I'm going to give him some money for daycare for the child. So you see, that's how you get it. But remember, some politician came in and give each credit until you get a bunch of credits and you get some money back. So the way I explain everything to you, where's the money come from? The government. The government put up the money. And this is why some leader, some president, you could say, doesn't like it, because the money comes from the government. And we have to be careful, because the money belongs to the government. When you take some from that money illegally, wrongfully, or by fraud, they have the right to question you, and then sometimes tells you that the money you take, it's not your money, it's their money. You're gonna have to give them the money back. You have to pay penalties for doing so, and sometimes they charge you interest, and they charge you what we call compound interest. Now, the interest and the compound interest, they're added to the penalty and to the money you took. They charge you that daily. Each day they added, the interest to it. And in a short amount of time, you end up owing a lot of money, because you took the money and you have to make arrangement with them right away. Now here's the bad part. This administration is talking about when you take the money from the government that's not belong to you, it's like you stealing from them. And right now, if you steal a candy at the store, you're a permanent resident, the store owner has the right to call the police if he wants to. When he calls the police sometimes got, based on your status, they can get immigration involved. And when they do, guess what's going to happen? You're going to pay a high price for that. You can end up being deported for doing something most of the time you don't know. Because, like I said to you, the tax preparer never tells you what he's doing in your return. This is how to protect yourself. How to protect yourself is when you go prepare your return at the tax preparer's office. When you give him all your information, you tell him first, I don't want to add or take away anything from my return. And when you finish with my return, I want you to give me a copy of what you done today, of what you did a few minutes ago, or whatever, or of what you're doing. With that copy, you can be protected, because let's say when you finish with him, you go, some preparer, when you go, they change your return. So the copy he gives you, you want to know that the date and the time you come to do your return, it's on there. You want him to sign it as a preparer. You can sign it too if you want, because it's yours. You can sign it anytime you want. But the day you signed it, because when he signed the return, because on the first page, the second page of the form 1040, the 1040 is the main form when people file taxes. You want to see the Form 1040 and page 2. 1040 has 2 pages. Page 2, it's where you sign, where he signed. So you can sign it in front of him, he signed it in front of you, and he show you your refund. And the page 2, that's where you see what you're gonna get back. Now, any changes he makes, and we know he's going to make some, it's on him, because you do have a copy of the original 1040. With that copy, you'll be able to tell him that, hey, this is what you gave me, and this is what I expect. Now, most of them, they don't want to give you a copy because they know with the copy, it set up a trap for them. Why? Because when you go home, or you can be here, he's doing whatever he's doing, he's going to send what he feel like sending to the IRS so he can make all the money that he can get. Okay? If he does that, it's his problem. Now, you can do 2 things. When your check comes, or they deposit it on your account, whatever he does, whatever you want to do, because sometimes people want to do ERC. ERC, it's a way to get your money a little quicker, and then not only you get the money a little quicker, you can, with the ERC, you can do direct deposit. They can deposit it to your account. Or you can say, if you're going to say, I want my check to come to my mail, he's not going to do anything because he cannot do anything. However, many people these days, they want to do it faster so they can get their money. That's the way they can do things to you. But there are a good amount of people that file return for people, or you can call them preparers as well. They do things the right way. For instance, me, I file your return the right way. If you want to add something to it that is not good for me, because there's certain things I wouldn't do on my software, because IRS can see that I'm doing something wrong too if they want to check. And I'm going to say, no, I don't work like that. If you want to go someplace else, and I'm going to tell you why. But if you want to do it, you really want to do it, if you really want to do it, you can do it, but with somebody else, not me. So therefore, it is very important for you to know all these things so you can protect yourself too. Because once you have a copy he gives you, he signed it, make sure he signed it for you, then it's going to be very difficult for him to change. He can change it. On page 2 of the Form 1040, you also be able to see how much you're getting. So in that case, you have to prepare yourself for all that. Now, I think that's enough for today when it comes to income taxes. We're gonna do more with you next week so you can prevent yourself from being arrested or even deported. And you can protect yourself at all the times. I'm gonna tell you, this show is supported by LUCIEN Product. LUCIEN Product is a company that does herbal supplement. We've been around for almost 2 years now, and we're doing great work. If you in the Palm Beach County or any county, anywhere in the world actually, you can contact us at 561-541-5004, or you can contact us at 586-9918. We have a third number, which is 561-265-3269. We have a line of products that compose of blood pressure, blood sugar. We have cholesterol, prostate, asthma. We have one that's for kidney and liver. We have for hair and nails. We have for women who cannot get pregnant. We have they can be fertile. It's really, really good. We have some for the eyes. We have brain support. People with Alzheimer and dementia, we can help them a whole lot. We have what we call animal extract. It's for men. It's good for erection. If you need to build your libido and testosterone, your immune system, you can use that. It'll help a whole lot. And some women take it too because they need the energy at work and things. They can get up in the morning. So I see some women bought it from us. We also have 3 new ones. They have one supplement that can help people with cancer or for prevention. We have one that is good for gas, acid, and it's detox people. It's a cleanse. It cleans, and it cleans your whole intestine. That can make you feel brand new. And we also have one for the flu. Like if you have cold, fever, you're coughing, it helps a whole lot. If you need us, like I said, you can call us at 561-541-5004. And for your tax and immigration, you can call the same number, 561-541-5004. And you can reach us also at 561-586-9918. And you can also reach us at 561-265-0243. Now, we have an address where I am is at 920 South Dixie Highway, Lake Worth, Florida, 33460. And we have a second office at 229 Southeast 2nd Avenue, Delray Beach, Florida. We also have Double Action Insurance Company, where we sell insurance for life, for car insurance, for health insurance, Medicaid, Medicare also, and we also have home insurance. Like if you have a mortgage, you need insurance to cover the house, we can do that. Don't forget to call us, especially for your tax purpose. I know a lot of people have problem with their taxes. Call me on my cellular on my cell phone at 561-541-5004. Thank you. Have a good weekend. Until next week.